Good afternoon. Last day before the last day of stock buyback window closing. There's a lot of things going wrong in Asia, but the markets here just do not care. We have tons of stuff to talk about. ETH just on an absolute shit missile going straight up. All that and more on today's episode of Money Never Sleeps. Welcome back to Money Never Sleeps. Before we get into anything, just a reminder, we're not financial advisors. Nothing we say or do is financial advice. We are 100% a couple of guys just like looking at the markets, sometimes pulling their hair out when they don't act rationally. But for the most part, we're just here to tell you what we're thinking, what our plays are. Never, ever financial advice. I'm joined today with Mr. House as J-Web is still up in Canada shooting turkeys. It's a long trip. It's a two-parter. So how are we doing today? Glad to have you here.
Doing good, man. It's a nice day when you wake up and ETH decides to just take a nice ride to 2300 plus. So yeah, other than that, just feeling well.
Yeah, I'm glad you're having a nice day, brother, because I'm having a terrible day looking at one thing in particular. And I'm not having a terrible day. I'm just being a little cheeky bastard here. But I think the thing that's been on my mind all fucking day, all night, has been Bank of Japan, because they announced that they are going to be looking forward to ending the period of negative interest rates. And this absolutely just sent the yen going flying straight up, dollar down. And this is pretty much paved the way for the little bit of a stock rally that we're seeing today, right? We knew that this week was really important for the stock market because it's the end of the corporate buyback window. We didn't necessarily see it until maybe today because everything's been pretty red or flat this week. Going into tomorrow being the last day, I'm not surprised that they are taking advantage of it a little bit today. Again, I think some of the jobs data that we got in today doesn't necessarily hurt the stock market, but it's really taking advantage of what's happening with the BOJ in Japan. Now, I'm going to pull up the chart for the yen because this is just something that's pretty concerning. Because if you look at it one way, it looks terrible, but if you look at the other way, it's like, okay, a big picture, macro, what's this thing going to actually do? So I'm going to pull it up as the USDJPY pair. So this means that we're seeing how many yen it equals one US dollar. And we could see that we are at 143.47 yen to the dollar. And we had a massive red candle. I mean, that's negative 2.61%, just an absolute shit missile straight down, opposite of what ETH is doing today. But I mean, this broke right through the 200 moving average earlier. That's very concerning, very concerning. It broke through this parallel channel. Usually, I'll get to this in a second, but usually when it hits this, it bounces off. And the few times that we've actually bounced off this bottom of this parallel channel have been huge, like crises, whatever it is, in the United States, or just globally in the financial sector. If we go back to the beginning over here, we can see that this is March 23rd or so. So this is right around the same time that the banks were collapsing here in the United States. Now, if we move to the next time in July, this is around the time, I think, well, June, July, this would have been like around the time that Credit Suisse got acquired by UBS, like the deal was actually put into effect. Now, here we are. We haven't touched this since July. We broke right through it in December. The question is, what's breaking? If that trend continues, what's actually breaking in the financial world? Is it something that we don't necessarily know about? Is it something domestic in the United States, and this is central banks trying to correct that problem without it getting out, or are we seeing something in Japan or Asia for that matter that is really concerning that we need to be keeping an eye on? Because as of right now, this is pretty much unwinding the yen carry trade, which is very concerning, and stocks are probably doing the opposite of what they probably should be doing if that's the case. Let's see here. Any thoughts on that, man? It's kind of wild, in my opinion.
No direct thoughts. I guess what would be something that people can look for in the market when they're trying to figure out, okay, what's the fallout of the yen, or I guess the dollar losing so much value compared to the yen, right? Like what'll be an indicator that people can look for, whether it's in stocks or other equities markets that aren't necessarily pertaining to Forex?
Yeah, I mean, I think a huge thing that's going to be important is obviously treasuries. We're going to see U.S. treasuries. That market's going to be impacted because again, we know that Japan has a ton of U.S. debt. However, if the yen starts growing in value and they're borrowing against it, and it's going into the U.S. market where the yields are actually dropping, as opposed to in Japan where the yields are going to be rising, they're anticipating that's going to probably hurt the treasury market the most. So that's why we're probably seeing a little bit of green here and there with treasuries, not necessarily too concerning. And again, even the DXY, I'm going to pull this up right now. It's had a really good move to the downside today. However, it's nothing I'm too concerned about when I look at this on the macro. Again, we got rejected off the 200 EMA on the daily for the DXY. We look at this compared to the Japanese yen. The yen's trying to find support on the 200 EMA. And, we've been talking about the stochastic RSI. It's been really interesting how this has just been compressed down here on the daily. I mean, this is completely oversold. It's going to be, if it's not oversold today with this massive red candle, then I believe that this 100% is a fraudulent system. But jokes aside, that should be, I think that the yen is actually bottoming out here. And I think it was this news that kind of sent it overboard. And we want to see that correction now to the upside because I do think that the dollar is going to gain against the yen moving forward. That's just my opinion. The dollar went all as low as 103.304 today. It's currently sitting at 103.537. So it's had a good bounce from that earlier today. Now we look at the stochastic RSI, completely overbought. But if we look at the weekly and the monthly here, completely oversold. If we look at the monthly, it's completely oversold. And it's really important why I'm very bullish on the dollar here. And that's because I anticipate that equities are going to start bleeding if the dollar goes up. I think that this is maybe the last correction for the dollar here. And that's why the yen is so important. A lot of people are saying that the yen is going to continue to rise against the dollar and the dollar is going to lose because we're going to cut rates. They're going to be raising them. I just want to point this out. All right, we're obviously in a bull market for the dollar. If we look at this on the long term for what's going on here, right? It's been going up nonstop since January 2021. However, what's this? If we look at the reverse of this, the JPY against the US dollar, I mean that's where we are today. It went right to, if on the weekly, this level of resistance, which is also the 50 moving average on the weekly, and on the daily, we are finding rejection on the 200 EMA. And if we look at this down here, the stochastic RSI on the daily, it's literally the inverse of what we're seeing on the other chart. It's been coiling up. It's higher and higher to the point where it's just completely overbought. If we look at this in the past too, every time we've gotten something like this, I mean, not to this extent where it's just coiling up like crazy, but everything has just been putting in a lower high each and every time. So I think it's really interesting to see how the market reacts to this initially. I don't think equities have reacted at all to this, but eventually I think this is going to cause another break where the Japanese yen is going to keep going down. The dollar is probably going to continue to rise here. And then we're going to start to see equities and treasuries start to show signs that there is some trouble in the system. It's a very long-winded way of me saying that, but I think that we are seeing the unraveling of the carry trade. We are seeing the dollar being tested here because at the end of the day, if it comes to hyperinflation or a recession, the dollar is going to survive in a recession every single time. Might not survive hyperinflation. So I think we can kind of figure out what the U.S. government and what some of these other central banks kind of want to happen as opposed to what potentially people are anticipating happening. Let's see here. That's all I had on the Japanese yen. Let's talk a little bit about jobs. I'm going to pull this up from Reuters real quick, and then we can get into some of the fun stuff. Pulling this up on Reuters, this is the U.S. labor market. We got kind of flat data today when we look at initial claims and everything like that. We can see that wholesale inventories were revised down, steadily slowing. We kind of knew that the market's slowing. Weekly jobless claims increased 1,000, so nothing too crazy. It's about on par with what they were anticipating. And then you can see there that continuing claims dropped 64,000. So it's kind of a mixed bag when you look at this data today. It's not here nor there that's showing you that we're in an extremely big contraction for, hiring. I think we are in a contraction for hiring. We're going to start to see the labor market absolutely start to rise in unemployment. But ahead of this data tomorrow, I think this was the perfect opportunity for the stock market to rally off of it because it's kind of a nothing burger, right? So when I look at this and everything that we've got this week, I have my opinions of what I anticipate tomorrow to look like. And again, I do anticipate that tomorrow's unemployment is going to get revised in the months to come. But I was just curious, what are your thoughts on the current labor market? What are we anticipating for tomorrow's unemployment print. Is there anything that you are looking for particularly to see if that plays out from this data print tomorrow?
Yeah, I think the big thing, at least in my mind, is looking at the numbers from November, December, but then comparing those numbers to what happens in January and February, right? Like when I look at these numbers, weekly jobless claims increasing makes sense. But also continuing claims going down also makes sense because we have to think about all the seasonal hiring that's going on. Black Friday, Cyber Monday just ended. We've got Christmas coming up. So, we probably saw some companies realize, hey, we were understaffed for Black Friday, Cyber Monday. We need to get more employees in short term to figure out how we're going to ship everything and be done by Christmas and, the post Christmas wave. Because let's be real, if you haven't ordered something by what's today, the 7th, you got 5 more days. Otherwise, it's not going to be there by Christmas. It'll be there on New Year's week after. And people are working that entire time through to try and get everything shipped out. So, yeah, ultimately, I think what's happening now, the numbers will be a little bit obfuscated because of those seasonal labor roles. And when we see that gap in between kind of springtime, when you get that next labor migration into agriculture as things are being planted, especially those commodities like wheat, corn, soybeans, and that gap in between seasonal labor for holidays and seasonal labor for agriculture, I think that's where we'll start to see some of what the true numbers really look like, when there's that gap in hiring to meet the seasonal need.
Yeah, that's a great point. I completely agree with you because, again, if we look at this data here, it's weekly jobless claims. And I believe that continuing claims also is generated on I think it's biweekly, how we get some of that data. So I'm not surprised either. Again, seasonality is going to definitely play an impact in the labor market. I think if we're looking at November as a whole, outside of some of the jobs that are seasonal, we did see a pretty good amount of layoffs in the month of November. I think it was up to 50,000 or so we saw from corporate jobs. So that's going to be really interesting to see how that plays into effect with what we're getting here also on the smaller time frames for some of the labor data. I anticipate that we should be realistically, we're probably in the 4% territory for unemployment. Not high or anything yet. I think that we're probably at maybe 4%, 4.1. I mean, even if we come back at 3.9, I'm not surprised if that's the case. I do know that we are going to probably be rising in the months to come. Again, we're also seeing unemployment in other nations start to rise as well. So that's going to be really, that's kind of a leading indicator of what's to come here. But yeah, I think that tomorrow we're probably going to see maybe a little bit hotter than expected. I'd say 4%. And I mean, maybe not hotter. I guess it's not going to be an ideal number, obviously, as unemployment goes up, but it's probably going to be 4%. I think that would be something that wouldn't spook the markets necessarily too much, but it definitely gives you insight as to what's to come moving forward. Now, January, talking about December's unemployment data, that could be totally skewed. That could definitely be flat or even come down. But then February, March, moving forward, I anticipate that we are going to see that spike up. So with this, I think it's nothing. The markets are definitely reacting and taking advantage of this kind of nothing burger news that we got today. And tomorrow, even if it does come in a little bit higher than expectations, like I said, that 4% mark, I don't think that's going to spook the markets too much. We got those stock buybacks, man. You got the last day. They're going to take advantage of it before it's too expensive to buy some of those. So I think that's kind of the trajectory that we are on for TradFi with some of the labor data. All right. Now, the fun stuff. Let's do this. Let's look at a nation that's in economic depression, yet is hitting all-time highs. Yes, you guys got it right. The DAX. This is, if you had never heard of this, because most people probably haven't, because it's who actually cares about this half the time. This is the German index. This is essentially their S&P or their Nikkei or their Hang Seng. This thing hit all-time highs. And if we've been following what's going on in Germany, we do know that they are outright in a manufacturing economic depression, and they just continue to climb. And it just shows you that the market is not the economy. There is a disconnect between the two. And eventually this is going to blow up in its face. You can't just have people that are, losing their jobs, and factory orders are decreasing significantly month over month to the point where this continues to go up. Eventually this is going to blow up, and we are going to see this pull to the downside. Now the question is, how does this impact the rest of the Eurozone, right? Because the fallout in one country obviously is going to bleed into another as they all do share the same currency. That's going to hurt the euro most definitely, in my opinion. And we're going to start to see maybe some other cracks in the system across the Eurozone. So this is just something we needed to keep an eye on. I think it's fun to look at these indexes and see how they're reacting despite the contractions that we are seeing in their economy. It's no different than looking at the Nikkei going up just like this, as opposed to the Hang Seng, which is going down. And all of them are seeing different types of absolute economic turmoil, whether it's deflation or inflation right now. But it's just really interesting to me because we are so disconnected from the reality here in the United States as well. But the market continues to go up. It just shows you that, yeah, this shit happens all across the board. We're not unique in any way. So that's boring. Let's move on because we can just see that the treasury yields are also pulling back here too. Now this tells me that people are moving money into treasury yields. It is what it is. We can see that the shorter end of the curve, the 1 year, the 2 year, these are starting to see red, which is what you kind of want to see because you want to see the longer end, see those higher yields, because obviously you're going to make more money for locking your money up for longer periods of time. So that would make the most amount of sense. It's also a healthier economy when that happens. But we're starting to see these turn red a little bit faster than the others. We're at key levels of support, not just we're at the monthly, there we are. On the daily, we can see that we're just kissing these 200 EMAs across the board, right? I mean, that one's below it. 7 year, right on it. 5 year, right below it. 2 year, right below it. 1 year, roughly right below it. So we can see that the shorter end of the curve definitely going below that 200 EMA. We're probably going to get a death cross at some point. Do I think there's going to be any type of rally in the markets? Not necessarily. The title of this, on the thumbnail was the squeeze. And I think this is probably going to be the big squeeze we're going to see in 2024 as people move money into these treasuries. That's just my opinion. I think that when you have these percentage rates that are just so high right now and you kind of want to lock in those gains for the month ahead, the year ahead, considering that we've had a 20% move up in equities this year, that can't go up forever. That's not sustainable, especially if you know what's happening probably coming into 2024. I think smart money is definitely moving money into treasuries just to make sure that, hey, we're locking up some capital. We're going to make that yield is what it is, but that's definitely going to impact equities nonetheless too, because now we're going to see that money flow out of there and into some of these. Let's see here. Any thoughts before we move into crypto or anything like that, man?
No, I just think this really kind of makes sense and aligns with the overall theme that we've been talking about of, Powell and the Fed have been warning against putting more of your, liquid capital into government debt, right? And we're already starting to see the ramifications of that. And I think it's going to be another thing just to watch over the next few months and see if we start seeing all those treasury yields pulling back, how banks and companies that have invested in them are reacting, right? Like if they start to feel as if the returns aren't worth the risk that they've been taking on and they're starting to, fear a little bit more, we could see some interesting things happen with it. But now other than that, let's jump into crypto.
Definitely. Absolutely. What do you want to start with in crypto? We can talk about anything you want. I'll let you choose.
Let's start with ETH because I think that's definitely been the hottest thing of the day, and also where most people's head is at and most familiar with.
Definitely. Let's pull up ETH. We got it right here on the daily. You can see that it's still in this parallel channel. It hasn't broken out of anything. There's still room for the upside, I think, which is kind of a ballsy thing to say after seeing such a great move to the upside. But nonetheless, we do know that this market seems very intent on pushing this past, the point of no return. And we were talking about also liquidations a few days ago where we were seeing, I think we're trying to build, or at least market makers or people that are trying to distribute some of this at this point are trying to destroy all short positions so that there's none north of there, so that they just build this massive amount of liquidity to the downside, right? That's kind of my base case for what's going on in crypto right now. I completely understand why the price keeps going up. They just want to make sure that it makes more sense to take out all the lows below there to grab all that liquidity as opposed to keep pushing it up higher. Again, we could pull up CoinGlass in a little bit, but ETH, we could see it's still in this pattern. It's doing really well. It's up 5.03%. It's up $112 today. I didn't expect it to make this move today. Also, I was just, I think you were the one that broke the news to me. I hadn't even looked at crypto this morning, but it's a really good move. And we could see that If we look at this on the weekly, this is I mean, it's just a really good fucking move. I can't say anything other than that. I don't have any ETH or any exposure to it in any way, but if you had any ETH and you were telling me before how you're doing fairly well just because ETH's just been going up like crazy lately, that this is great opportunity to be holding some of that. So I'll let you take that one away, man. This is it's all you.
Yeah, no, I mean, I think we're in a really interesting time, and I think you started to allude to it, where I think there's definitely some more room to the upside. But to me, a lot of this support and a lot of this upward movement seems to be narrative driven, but none of those narratives have come to fruition, right? So it's almost a matter of how long are people willing to ride the narrative, and then also what you were mentioning, where smart money and whale money seems to be just accumulating, liquidating short positions, driving money up, making sure longs are cashing, but setting up a lot of spots for liquidity to be, just sucked up on the way down. So, I think if you look at not only ETH, but you look at Bitcoin, because we've got the halving coming up in, early Q2 2024. You look at it from a historical perspective, we tend to get a pretty good pullback in the months leading up to it before we start to see that giga pump, right? So I think that's one thing that I'm kind of looking at right now is, I have no doubt that we have room to move up to the upside, but is there a point where we start to see some of those historical pullbacks and it looks more like a collapse than a pullback for a little bit? Or are we just fully embracing there's nothing to be bearish about, this is up only, because all of these narratives in conjunction are so strong as a unit, right? Where it's got me kind of confused, where I'm still holding some ETH, I'm making some plays in ETH, but at the same time, it's like I use ETH to transact as well. Like when I'm using blockchain, ETH is the main network that I use. So it's harder for me to hold ETH other than putting it in a cold wallet. So I've definitely been stacking a little bit more Bitcoin than I have been ETH on my DCAs. But no, I think, I had a good point brought up to me, where if you're really worried about the multiple, right, and you're not necessarily worried about the dollar gain, there's probably a better shot on a bigger X on ETH than there is Bitcoin, right? Like if you start to lean into sort of that bullish narrative of we could see Bitcoin hit 100K this cycle, well, that's going to mean, ETH probably winds up somewhere around 10K. So do you want a 2X or do you want a 5X? What's your capital? What's your risk tolerance? And, what are you willing to make work? So I think it's really interesting, but, TLDR, kind of summarizing it, I think we're probably going to go up a little bit, get a pullback, and then once the pullback's done, start riding upwards into the halving.
Yeah, I mean, you made a really good point. Every halving, we get about a 38 to 42% retracement on Bitcoin. So we haven't seen that yet, right? We haven't seen any backtests whatsoever. And the fact that we haven't seen any backtests probably tells me that we might not hold support for a period of time. We might actually break through a lot of levels of support. We know that there's a lot of gaps. And again, I don't really care about Bitcoin or Ethereum right now, just because I think that the upside potential is capped, and I've said that for a period of time, and clearly I've been wrong, given all that you want to account for what's happened, whether you want to say it's ETFs, whether you want to say it's the new stablecoin partner of Russian payment service. I think that we are definitely seeing, and I'm just going to do this based off of macro. Let's just look at this as an Elliott wave theory situation. A, B, C, something of this sort, right? I think it's an ABC correction. I mean, it could even go lower than this. I don't want to be that bearish, because if that's the case, then I think we have bigger problems if it goes that low. But if we look at this right here, let's grab, so we have wave one, or wave A, wave B, wave C. I think we've completed wave A. I mean, that's guaranteed, right? In ABC correction, we expect 5 waves in the wave A, 3 waves in the wave B, and then 5 waves in the wave C. This is the one that we really want to see, because this is going to lead us to the end of the bear market, in my opinion. Now, if that's the case, let's just do this. Wave 1, wave 2, wave 3, wave 4. Wave 4 can't go higher than wave 1, the bottom of wave 1, so that makes sense. And then wave 5 is somewhere down here on FTX. And then if we look at this here, A, let's say B, and then C here, that makes a corrective pattern. And then we would anticipate 5 waves down. To what that looks like, I have no idea. I mean, that could be pretty steep. That could be a quick, retracement. I really don't know how this is going to play out because I think there's a lot of things that do come into play when we look at this scenario. I mean, that makes sense to me on the macro. It's kind of like big picture. Doesn't make a lot of sense when we look at this on the smaller time frame. And I again, the reason I say that is because if we look at this on the daily in some of these areas, like when we get these massive green candles that straight up, that definitely impacts the wave count on the shorter time frames and makes it way different than what we would see on the macro. But the macro, for the most part, still is holding true to that narrative. And again, corrective waves tend to break down from. This would be the perfect break. Obviously, we're in this parallel channel. You can see right now that we are above the parallel channel. We were in it for a period of time. We're extremely overbought in the daily. So I wouldn't be surprised if on the weekly or the monthly, we're back into this thing. It's going to be really interesting to see that. But yeah, I mean, this is what my base case is for Bitcoin right now. I think that we're seeing push the price up as much as you possibly can, offload, destroy all shorts. And now we have to see pretty much all that liquidity build below. And we know that there isn't a lot of support below because we didn't find any support on the way up. Kind of similar to what's happening with Binance and BNB coin from that, 2021 pump that they saw in February. This is something that I think we're seeing right here with Bitcoin on the macro. We're going to have to see it play out if that's the case. Now, I want to get rid of this for a second. Let's pull up some of the liquidations and the funding rates because while you're speaking, I took a look at the funding rates real quick, and they're not great. Very scary looking across the board, but it just shows you that, this market is a bit psychotic at the time being, and you have to be very careful because it could go on for a while. So now this is the liquidation map that we're looking across 24 hours. We can see $173 million worth of liquidations have been taken out. $109 million of that is all longs. The rest would be all shorts. So that's very interesting. You're seeing that there's definitely more liquidations of longs than shorts at this point. So very funny. But if we look at this in general, we know that the shorts have been actually getting liquidated a lot more. And recently, this is just because we saw a pretty good pullback last night on Bitcoin, but it seems to have bounced back a good amount since then. Now, let's look at this, the funding rate. Look at all this fucking red, guys. I mean, this is psychotic. This is 100% people just max longing to shit, and they're willing to pay a massive premium to anyone who's willing to short. So you could be making some USDT right now. If you're holding a short, they're just paying you a shit ton. Now, the problem is, are you going to get liquidated before you can see any of those gains from those funding rates? The answer is probably yes. But if we look at this across the board, this is, I mean, I've never seen it this bad, House. This is absolutely insane. Like, I can't see, I mean, maybe one green ARB on OKX over here. That's coin margin, so that doesn't even matter. This is psychotic. I mean, this is absolutely just fucking crazy. Sol right now has a 0.05% funding rate. People going max long. BNB 0.06. Let's see what else we got. Anything too crazy here. This is Bybit Maddox at 0.648. Or yeah, this is just insane. Let's look at if we look at the 7-day, maybe. I mean, look at that. One green across the board. So we are definitely in a place where they're just using max long on these perps, and that's fucking scary.
Yeah, that's wild. I had a feeling that we were going to see some pretty bad funding rates, but no, that's absolutely crazy. I'd be curious to see what funding rates are also looking like on DEXs, as most of these are looking like sexes.
Yeah,
I'd have to imagine they're probably not looking great either. But yeah, as we start wrapping things up, let's take a look at C2FI Fund real quick, because that's one of the tokens we've been mentioning on here a little bit lately. And man, that thing has literally been up only for, I think, the past month or so. It's been just going on an absolute ride.
Look at this on the daily, dude. That's fucking insane. You were telling me earlier it went to 313, right? Yeah.
Yep.
Actually, no, higher.
It hit a new high since then. And I think it hit like $3.23.
What the fuck?
But it's honestly, it's one of those things where you look at the chart and given that it's a token that's not traded on most major exchanges, I think it's on like Binance, Bybit, and BitGet, maybe a few others. There's no news on it within TradingView, right? So it's one of those things where you have to really be following what they're doing. And we've mentioned it before, so I'll keep it brief. But in summary, they're an incubator for Web3 projects, whether that's protocol, game, whatever you're doing. And they also do initial DEX and initial coin offerings through their launchpad for people who hold their token. They have their own game that they've been working on that's coming to market soon, doing very well from a publicity standpoint, as well as I think they put up a stat that showed they were the most profitable launchpad as far as if you bought every token that their launchpad released during the bear market. I think every single token was in the green, and there were a bunch of them with some pretty solid returns. So I think that's part of the reason why people are really doubling down on the C2FI fund token. But man, that chart is just absurd from October hitting that 53-cent low to, 6x now.
Yeah, man. Look at that, 531%. And I'm just eyeballing that at the bottom too. That's absolutely insane. I was looking at this on the macro just to see if where resistance lies, because there's enough data here to see if there is resistance moving forward, right? It obviously came down significantly. Now, where we are currently is really interesting because I just drew this white line. Obviously, the white line doesn't mean shit, but if we look at it back here, June of 2021 from the ICO, or whenever it got listed on KuCoin, we could see that that's where it wicked all the way up to. We could see that back in August 22, we wicked up there. We found resistance right around the same level that we are right now. Same thing in September 2022. And we're the first time that we've reached back here since, September 2022, which would have been 9.1% inflation. That was a terrible time in the markets in general. It led into October and then eventually FTX. Now it's pretty much retraced all the way to that point. Now the question is, how much more in the tank is left for something like this, right? I'm not trying to fuck your bags or anything like that. I'm just trying to be realistic and seeing what this price is doing. Now across the board, this is
I'm thinking the same thing as you, right? Because such a monumental rise in the span of a month and a half. Like, it's great, don't get me wrong. I love looking at number go up, but it also, like you said, it's like, is there how much more liquidity is going to be coming into this token? Is it going to be that FOMO rush that people start experiencing? Or is this the point where people who have been holding it since it crashed down to like the 30 cents, 40-cent range, is this when they're like, yeah, now's a good time to start selling? And I've sold a little bit of it off, because I got in on a really good rise really fast. And I was like, it's always good to take some profits given the state of the market. But there's another token you mentioned on here that has done almost the exact same kind of pattern on the chart, and that's Merit Circle. So they just announced that they're going to be migrating their token to Beam, which is going to be the token of their subnet. But the Merit Circle token, not quite 500% gain, but 430%. Same thing on the daily. You're on Mechaverse.
Oh shit! I just saw the MC. My bad. MC.
It's just you have to type out Merit Circle.
Oh, okay. Merit Circle. Is it the first one? It looks like it's the market cap.
Merit Circle crypto. Yeah, it's that orange circle looking thing.
Okay, cool. Yeah, it's massive.
But yeah, same thing. It's slightly different. They're not necessarily a launchpad company per se. They're a DAO run organization. They have a subnet on Avalanche. They're partnering with and funding, providing support for a lot of games that are going to be hosted on their subnet. And similar thing, was down in the 20s of cents back in October, and now it's up at $1.50. So it's really interesting. And, just gaming tokens seem to have the big narrative right now that everyone's getting really bullish on. So it's another question similar to C2FI, whether it's Merit Circle or any of the other tokens that are just ripping right now, like big time Alluvium Shrapnel, is how much more liquidity is there to come in? And then also, how long are people going to maintain interest in the games and interest in the tokens, vice versa, right? So I think it'll be really interesting to watch over for the next few months.
Definitely. Yeah, I mean, I was just looking at CeFi on CoinMarketCap. Thank you, Binance, for that data. But I was just looking at the market capitalization for it, and it looks like that the market cap is sitting around, where is it, 176 million or so. So 176 million or so in market cap. So that means it's fairly. I mean, it's liquid, but is it possible that we could get another push up from there? Yeah, I think it's low enough liquidity to the point where there's enough money that can come in and definitely inflate the prices. Now, I wanted to look at Merit Circle real quick too on CoinMarketCap just to see what their market cap is looking like. Yeah, that's it's about half a billion dollars in total market cap. So it still is possible. I mean, obviously we've seen like Matic and some of these other ones just absolutely rip up, and those have much larger market caps than a lot of those. So it's definitely possible. I think it just has to catch the right traction. And I think it also helps if it doesn't hurt if Bitcoin dominance does come down a little bit here. I don't think Bitcoin dominance is done, but I do think that right now we are seeing ETH kind of help out some of the alts in that case, and we could see price push up a little bit. So with Merit Circle looking right here, this white line 184, 185 essentially, I think that might be a really good level of resistance. I mean, to push up from where we currently are to go there, that's it's 17.68%, but in the world of altcoins, that could happen over the course of 2 days, right? I mean, it could happen in a few hours. So it's going to be really interesting to see that one. Anything else on the alt front? I might just take a look at total 3 or some of the total ones, and then we can call it a day.
Yeah, let's just head over to one of the total MCs.
Yeah, let's see. Total right now, nothing too crazy, extremely overbought. This is on the 3-day chart. Let me look at the weekly real quick. See, the weekly is nice and overbought. We do see that there is a bit of resistance in this area. I'm not going to get too overboard in terms of looking at resistance right now, because it does seem like for the most part things just aren't finding resistance across the board, and they're not even testing support. So we have to keep that in mind. Also, we know that people are going max long here. If I just look at this across the board too, this looks very similar to the Bitcoin chart we talked about earlier, this ABC correction. That's 100% what this could be. We have to break it down into smaller steps. So we could say the bottom's here, A, B, and then we're currently going into our C wave, the top of it. And then this could be, something like 1, 2, 3, 4, 5. We'd anticipate another 5 waves down from here. To what extent it might be deeper than we're anticipating, or it could be, a shallow 5, as long as it kind of goes below the wave 5 of the first A wave. So that's going to be really interesting to see across there. We know that alts are, just look at alts real quick. They kind of broke out of this channel. We thought that this was going to go down all the way here before it broke out, but it broke out a little bit earlier. So we can kind of get rid of this. And we can kind of say that, okay, we've went higher than the origin up here. So that means that this is no longer valid. And now we can kind of say that, okay, maybe this is also another case of an ABC correction. I don't think so. I think this is still the wave 4. And again, we have plenty of room before we get even into the territory of invalidating this. But this could be, what I'm thinking is a 5-wave move to the downside. We would have to anticipate wave 5 here. And I think that kind of lines up with our wave 4 being 3 waves. Once again, similar to the other ones. You got wave A, wave, we can say the bottom's here, and then wave C, and then now we would anticipate another 5 waves. So I just wanted to give a little bit of an Elliott wave theory perspective into somehow how these structures are forming, because you're not going to be able to see this on the shorter time frames. Everything right now is just very noisy, and when you see just green candles for weeks on end, you're not going to see the bigger picture. But again, Elliott wave theory, it tracks market psychology, how people react to price movements in the markets. It isn't always perfect. You kind of have to adjust it as things go. But for the most part, we can see, what could potentially be the end of a move or invalidation. I think a lot of people anticipate invalidation right now, not necessarily anticipating that, hey, maybe this is just a corrective move and a larger move that we're anticipating to play out to the end. I think the worst is still yet to come for a lot of alts and crypto and Bitcoin. We saw those funding rates. Eventually, those are going to absolutely tip to the other direction. And we talk about liquidity being an issue here all the time. Once that goes, we're going to see, a fast spiral, because liquidity in crypto is very scarce despite whatever the market capitalizations are. Once people try to pull out, that's just an absolute tidal wave of, cash just bleeding out like crazy. So that's my 2 cents on what we're seeing right here. Any last words, man? We can wrap this up for the day.
No, yeah, I think that was a good show. It was a lot of fun, and Hope we spurred some good thoughts and conversations.
Yeah, man. Oh yeah, last thing. Tether just loves doing business with countries that are on U.S. sanctions lists. So, we saw that they are also teaming up with a Russian payment partner. Again, I got nothing to say about what they're doing on that end, but it's funny to me to see that it's like, hey man, we can't do any business with the U.S. being on our backs, so we're just gonna go around them for this time, and that's just gonna cause more problems for us later down the road. Sure, it's not gonna make them happy. It probably pissed them off a little bit.
I mean, I think that brings up like a whole nother debate within the ethos of, you know, Web3 cryptocurrency blockchain and like the broader decentralization permissionless thing where, like Tether as an organization, not a good look. But at the end of the day, it's like there needs to be some sort of I don't know. That's why it brings up a whole nother debate, whole different rabbit hole to go down. But
Oh,
honestly,
100%.
that might be a fun discussion sometime to have.
You know how much I fucking hate Tether and how much I hate that people worship them and CZ and all these guys that I'm just like, you know what? We
Well,
do
I
need a
mean,
little bit of carnage
it
around
comes
here
down to
sometimes.
like, why do people worship Tether, CZ, insert figure's
Money.
name? Because they made number go up for someone
Yeah,
else.
exactly.
Like, had the Terraform Labs never collapsed, Do Kwon and Suju, Kyle Davies, they'd be heroes for millions of people that never realized there was a Ponzi going on. Never realized, right? It's like at the end of the day, that's the thing. It's like people just love the person. They don't love the person. They love the fact that number went up.
Yeah, man. I don't think they're gonna like a lot of people soon enough if the price doesn't keep going up. But for right now, everybody is a hero to them. And if they have a poster of them in the room, they're kissing it nightly. I think we're gonna leave it there. Guys, thank you for being here. Randy, you're always here. We appreciate you, man. Chris, thank you for always being here as well. To our regular guys, Ace, Scotch and Socks, J-Web, even if you're watching us out in Turkey land, appreciate you being there. But we look forward to being back tomorrow. House will not be here, neither will J-Web. It'll just be me. So if you guys have any stocks or crypto coins, or I hate that I just say crypto coins. I'm a fucking idiot. Any coins you want me to talk about tomorrow and do some TA, just let me know. I sound like such a boomer there. I'm so pissed at myself. Not even like a bad way boomer, but I sound like I'm from the silent generation. But yeah, we'll talk about it tomorrow, and then also unemployment data, and then maybe even look at some more forex stuff because I do think the stuff in Asia is really interesting. But we'll leave it at that. Thank you guys for watching the show. We appreciate you, and we will see you next time. Take care, everyone.